So the summer of August here is pretty hot, and we're seeing obviously an increase in volatility across the board. So we're going to continue that sort of theme that we've had this month on dollars and cents, where we help you make sense out of all of life's decisions involving your dollars. One of Central Florida's longest running radio programs, coming to you on a host of stations throughout the Central Florida region as well on that good old-fashioned terrestrial radio signal. Check us out, though, on your favorite podcast platform. There you'll find our channel. Any trouble finding us, go to our website at Nelson Financial Planning. Click on the links that look most familiar, and they will get you immediately connected over to the channel on your favorite platform. My name, of course, is Joel Garris, certified financial planner, certified financial fiduciary. Joining me on this week's episode of Dollars and Cents, Chet Cowart, one of the fellow certified financial fiduciaries at Nelson Financial Planning. So, Chet, we're talking about volatility, political volatility, and spending volatility, and the election's coming right up, isn't it?
Absolutely. We're 70 days out or about, and on top of just general volatility of what we've all seen in the market, I myself have seen plenty of, volatility in the calls that I'm taking, and, everybody has questions about how this headline is going to affect their portfolio and how if this candidate or that candidate wins, what's going to happen. So there's definitely, people are concerned and just generally curious for sure.
Certainly, it's seeing a little bit of an uptick, maybe even more than just an uptick in terms of the number of calls and the questions that we're getting at the office about this topic. Only appropriate. It is certainly dominating the headlines, that Absolutely. Is for sure. But the reality is that stock market's got a pretty good track record.
Right. It generally has trended upwards no matter who is in office. I mean, over time it's done well. And no matter who is in office, I mean, of course, certain businesses may flourish more than others depending on who's in office. But I think if you're looking at indexes or just the market as a whole, the sentiment is generally pretty good no matter who's in office.
Well, and I think really what people kind of ignore, you get really focused on who we're electing and who's running and all of that. But I think far more importantly, people need to be looking at what the unelected officials are saying. And specifically, we're talking about the Federal Reserve.
Absolutely. That's who's going to have more effect on the market than anybody else. You should be watching Jerome Powell more than Trump or Kamala.
Well, and the reality is that there was some news this past week out of the Federal Reserve. Certainly, a number of data that came out this past week. So to recap that, you first had the release of the meeting notes from the Fed's last meeting that sort of suggested that rate cuts were coming. And remember how these work, folks. When you're cutting rates, that lowers the cost of borrowing, which is generally viewed as stimulative to the overall economy. When you're raising rates, increasing the cost of capital, well, that slows the economy down. That's how it works.
Absolutely, yes. So we're, if rates do fall come September, which would be the next meeting, that would be just generally good news for the economy as a whole and the stock market as well.
Well, and if the borrowing costs go down, mortgage rates, all of those things are intertwined. And so, the two pieces of information that came out, the Fed meeting notes, which really sort of suggested that the Federal Reserve was getting ready to cut. And then lo and behold, on Friday, Jerome Powell speaking at the very fancy Jackson Hole, Wyoming resort. I've never been there. You ever been to Jackson Hole?
I never have. No.
I've never been either, but it's very fancy, apparently. And
we weren't invited.
We were not invited, yeah. The Federal Reserve did not reach out to Joel and Chet and invite them to the conference. But what the headlines on Friday told me is that he actually, in a press conference that happened, actually made the statement that, and I'm going to read it specifically, the time has come for policy to adjust. So that's a pretty strong indicator that come September, you're probably going to see a rate cut.
Absolutely. It may not be significant, but it's going to be something, and that's going to be That's going to be just a general good thing for the overall market. Absolutely.
Certainly it reduces the borrowing costs because you certainly, as you look in certain parts of the economy, mortgage rates, all of those kinds of things are certainly having a little bit of a dampening effect on interest. But I don't know if you saw this other statistic this past week. Something like 80% of the population is feeling anxious about the election.
That seems like a low number to me. I would say it's quite a bit higher.
You think it might be more than 80%?
Yeah, I mean, I can only speak anecdotally, but I can say that what I've seen is a hell of a lot more than 80.
Might be more than 80. I guess with that much anxiety, that's really good for the pharmaceutical industry.
Absolutely. I bet blood pressure medicine is. I'd stock in blood pressure medicine.
Antidepressants, all of that. It's fantastic. And I guess that kind of underscores the point, Chet, and you mentioned this earlier, that underscores the point of what we're going to make really in this segment is the notion that if the D's, I'm only going to make money if the Democrats win. I'm only going to make money if the Republicans win. That's just nothing could be kind of further from the truth on that.
Right. I mean, if you're looking for some sort of pattern, I would say the best would be a gridlock. You don't necessarily want anybody in control. I mean, just generally, they're each side is going to try to block the other side from doing what they want. Good or bad, that's never necessarily good for the market. You'd rather have nobody dominating any part of the political system.
And that's a great point, Chad. Gridlock is kind of the warm porridge, if you will. Not too hot, not too cold. You're not swinging in either direction too far. But certainly the notion is that the reality is that different companies, different industries might fare better under the Republicans versus the Democrats, right? I mean, what's an example of what industry might potentially fare better under the Republicans?
Yeah, you could look at banks and financial services or, aerospace, defense companies, things like that, where just typically more money is going to be in those industries under under a Republican system.
Yeah, defense spending typically higher under Republicans, less regulation, which would favor banks, financials. But on the flip side, if the Democrats get in, then there's certainly some industries that would potentially do better under that regime as well.
Right. You could think of renewable energy, electric cars. They typically, you think where government money is going to go, who are they going to be subsidizing, what kinds of industries, that sort of thing.
And that's a good point, where government money is going to go. That really helps to drive. I mean, certainly there was a couple of major pieces of legislation that we've talked before on the show, and how much money is going into, like, infrastructure, which would be another area that might fare better under Democrats versus Republicans. But that, I think, is, you certainly have to acknowledge, that there's certainly different industries that might fare better one way or the other. But that's the point of using active management in your portfolio. And I think a lot of the world certainly follows passive or index investing, but that doesn't really give you the opportunities that you might be able to take advantage of depending upon what happens.
Right. I mean, I would say that's one of the biggest reasons why we're not proponents of single stock investing for our clients, is because it sort of takes the guesswork out of it. You don't have to say, well, should I be in this industry versus this industry? You can just invest in broadly managed funds that are, that are actively managed, that you let them do the job for you.
No, that's exactly right. And that's the point of active management, is to go where the opportunities are. But, that high level of anxiety, no question at all, obviously impacts people and their decisions that they make. So we do have some sort of 4 key points that we wanted to get across to people to really maybe make this as a part of how they are viewing the world these days, to maybe not have to take quite so much high blood pressure medicine or antidepressant medicine.
Right.
So
absolutely,
we got some key takeaways that we're going to share with you for you to use during the political season to help you navigate that. Because the last thing that you want to do, panicking as it relates to your investments, panicking as it relates to your finances, that's not a good strategy. So When we come back, Chet, we're going to give you some options that you can follow that are a better strategy than that. Coming up next here on Dollars and Cents with Joel Garris, Chet Coward of Nelson Financial Planning.